Friday, the final Friday in the month of March, and of course, the end of the week as well as the end of the first quarter. I am boasting on a very big Friday. Is the start of the long Easter holiday weekend. But of course, you got the big news out of Nigeria overnight. The central bank announcing a bank consolidation program over the next 2 years. We'll get to that in just a moment. But first, let's walk you through this as you lay back and enjoy your holiday across several markets in Africa and around the world. The Nigerian stock market, we've seen investors trading very heavily the shares of Nigerian banks over the last few days, just before the announcement came yesterday evening by the central bank for a banking sector consolidation. So we've got some of the biggest banks, UBA, Access Score, FBN Holdings, GTCO, Zenith Bank, shares being traded very strongly, including Fidelity Bank, over the last 4-day sessions that this week made, 4 sessions that this week had been. But let's sum it up now, where the market saw a comeback on Wednesday, then Thursday added additional 0.27%. The BFVN was better Thursday by 0.36%. The Egyptian stock market finished Thursday with 2.36%, a very deep dive as it goes into the weekend. Markets will reopen on Sunday in Cairo. Thursday trading on the Nairobi Bourse, investors pulled back very strongly, roughly 4%, took profit back from what has been the rally since the start of the week, while the GSE in South Africa saw 0.85% to the upside, but still around the 74,000 handle on the GSE index. So let me take you through the East Africa's headlines this Friday morning as you lay back, if you enjoy your holiday, the start of that around Africa and around the world. The Bank of Uganda, that's the central bank, has caught GT Bank and 2 other Tier 1 lenders in the country to credit institutions. In the meantime, Uganda says it's tabling 558 trillion shillings as the budget for the 2024-2025 fiscal period. And good news out of East Africa, being a good brother. That's what the whole friendship between sovereign, politically speaking, Uganda and Kenya. Now they've been able to resolve the fuel import feud in which Uganda was looking to Tanzania and a few other sources to bring its fuel into the country. Uganda depends very heavily on Kenya's port of Mombasa to supply its fuel or gasoline needs. Now the feud has been resolved over the fuel. That's good news. Thank you, folks, for resolving that. Britam Kenya, listed on the Nairobi Securities Exchange, it says posted 97.4% jump in its net profit to about 3.2 shillings for the full year 2023, while Burundi is set to start trading under the AfCFTA umbrella effective of that Burundi has gotten the support of the Africa Trade and Investment Development Insurance to underwrite 7.7% of its power project. We've got more countries starting to trade under the AfCFTA. By the way, I think we'll get into that within the Southern Africa's trading day headlines and, of course, the big business and economic news. But let's cross to Southern Africa. Politics is beginning to rear its head. Campaigns and all that's getting the whole groundswell for the May 29 general elections in South Africa is beginning to rev up. But first, let's touch with Nigeria. Let's touch base with Nigeria, where the Cardoso's-led central bank sent a circular to all banks announcing the flag off of the 2-year plans program for banks to recapitalize. It's going to be cash on the table, 500 billion naira for international banking institutions, 200 billion naira for local institutions, and it's all stratified all the way down to non-bank financial institutions, down to as much as 20 to 50 billion and all that. So you've got to read that up. But again, nearly all the banks in Nigeria will need cash on the table to meet the new requirements. According to some estimates by Nairametrics, for the top 10 banks in Nigeria, they will need about a 2.01 trillion naira to meet up the new capital requirements. These 10 banks are within the Tier 1 and Tier 2 levels. The total requirements for these 10 biggest banks in Nigeria will be around 3.8 trillion naira, according to the latest requirements by the central bank. And of course, the regulator is not allowing conversion using of shareholders' funds or whatever to calculate. It's got to be the minimum a capital base, and it's going to be cash on the table. This is squeezing the banks, in a manner of speaking, by Cardoso for all the pile of money that the banks made last year due to currency exchange devaluation. So the banks are the ones going. So we expect to see some sort of consolidation within the sectors, takeovers, mergers and acquisitions. Perhaps some folks will have to rejig their banking licenses. The program is now flagged off and will be expected to be completed 1st of April 2026. And good news for Nigeria yesterday, as the EFDB says it's pumping $75 million in additional support to Indorama fertilizer and chemical company based in Port Harcourt, Nigeria. That will support Indorama to produce more fertilizers locally for Nigerian farmers, support food security locally, and supports the export of fertilizer from Port Harcourt out of Nigeria into other countries. That's some good news. In the meantime, Chapel Hill's NIDF, the Nigeria Infrastructure Development Debt Fund, the NIDF, is reporting 20.4 billion naira's profit for full year 2023. The fund was listed just about a year ago on the Nigerian exchange. The Nigerian government says it has a new set of rules that only companies that would refine mineral resources will be, process them, will be allowed to operate in the country moving forward. So mining licenses will now be granted to you if you have the capacity and have the plan to refine those assets within the Nigeria's space. And the S&P has upgraded Cameroon's ratings from CCC C to B minus. And Senegal says it's posted 8.3% upside in industry turnover for 2023. That's the final quarter, October to December. So let's go to Sudan. Africa's a region where South Africa is reporting this PPI produces a price index or inflation to 4.5% in February, while the country says its FDI, that's the foreign direct investment, for the full year 2023 stood at 96.5 billion rand. That's, of course, sharply lower than 151 billion that was reported for the full year 2022. And Mozambique Central Bank says it's lowered its lending rate, key lending rate, to 15.75% from 16.5% previous. One of the central banks in Africa to decide on interest rate. This week we heard from Nigeria's central bank, from Seychelles Islands Central Bank, from South Africa's Reserve Bank, the Bank of Ghana, as well as a few others. In Malawi, we'll start trading under the AfCFTA in the month of October. That was the news I was alluding to earlier. Congratulations to Malawi getting onto that. Let's get on to North Africa and some of the business and market, with Egypt's cabinet approving $135.3 billion as the budget for 2024-2025. It's the first budget by President Al-Sisi after his re-election is for another term, which he secured last December. This is the budget for his new term in office. And Egypt's reporting no trade deficit, about $9.3 billion for the fourth quarter of last year, while Morocco's OCP group says its full year 2023 revenue was up roughly $10 billion despite difficult operating environment. And finally, Tunisia and Netherlands says they're discussing unemployment and vocational training program cooperation between the two countries. And those are your headlines. Let's take it all to the end of the week. And when we return, it will be bright and early in the second quarter of the month of April, starting next week. We'll get back to you on Tuesday when the markets are fully reopened across Frontier Africa and across many markets around the world. I am Bosun Omofai. Have a great day. Whatever you're doing, make sure it's profitable. Lay back and enjoy it. I'll see you then. Bye for now.